how crypto asset bridging works, and what it means for your taxes. Understanding cryptocurrency can be challenging, particularly when it comes to bridging assets. Many crypto enthusiasts purchase tokens on the Ethereum blockchain and move these assets over to other blockchains like Solana for various reasons, such as lower transaction costs. How do crypto bridging methods work? There are multiple ways to bridge assets. One method involves wrapping the current asset, but a more popular approach is using automated market makers. In this scenario, the market makers take possession of the asset on Ethereum and deliver an equivalent asset on Solana. Is bridging crypto a taxable event? As a taxpayer, you might think that you simply move the asset over using a bridging service. However, the transaction has more layers. On the ledger, you will see that you the asset as sold on Ethereum and a different asset purchased on Solana. Your perceived single transaction is actually two. How does crypto bridging affect your cost basis? If viewed from your perspective, the cost basis would be the price you bought it for on Ethereum, and the sale price would be what you sell it for on Solana. However, blockchain transactions are not that straightforward. Auditors will see that you sold your Ethereum asset and then received an equivalent asset on Solana. Why the IRS sees two transactions. When you bridge assets, these events mean your cost basis is the value when the asset was moved to Solana. Any gains or losses are realized when you sell the Solana asset. Therefore, for tax calculations, consider both transactions separately. This method ensures accurate gain or loss calculation. Breaking the transaction into two can cause differences in the holding period if one is expecting to claim long-term gain tax rates. What's the smart way to handle bridging on your tax return? Ultimately, you are taxed on the realized gains and losses from these transactions. To simplify, always focus on the transactions as they are recorded in the blockchain. Get professional help. If you regularly engage in complex transactions, consider contacting us at CryptoTaxAudit.com. We specialize in intricate gain calculations and offer fixed pricing, ensuring you pay the correct amount of taxes. No more, no less. Still have questions? You're not alone. Bridging crypto confuses a lot of people. Here are some of the most common questions we get at CryptoTaxAudit, especially from clients who've moved assets across chains like Ethereum and Solana. So first off, what is bridging in crypto and why does it matter for taxes? Bridging is when you move crypto from one blockchain to another, like Ethereum to Solana, often to save on gas fees or access different apps. But here's the catch. On the blockchain, that move shows up as two separate transactions, a sale and then a purchase, which means you might owe taxes on that bridge. Wait, does the IRS really treat bridging as a taxable event? In many cases, yes. Even if you think you're just transferring tokens, the IRS may treat it as disposing of one asset and acquiring another. If the value changed between chains, that could mean realized gains or losses, and that means taxes. Okay, then how do I report cost basis if I bridged my crypto? Good one. You'll want to treat it like two events. First, record the fair market value at the time the asset left Ethereum. That's the sale. Then, use that same value as the cost basis for what you received on Solana. This keeps your records aligned with what the IRS sees. And yep, we help clients calculate this all the time. Last one, can CryptoTaxAudit help if I already bridged and didn't report it? Absolutely. We specialize in reconstructing blockchain histories, correcting past filings, and shielding clients during audits. So even if you missed a step, we've got your back. Remember, this post is for informational purposes and not legal advice. For personal tax situations, contact us today at CryptoTaxAudit.com.